I know everyone's thinking they should have bought Tesla when they had the chance. I'm in that boat too. Today I want to address the common misconception that investment banking equals stock market or investment banking equals stock. I think there's some level of truth to this in the sense that finance is finance, and my assumption, maybe minus me, who hasn't had much luck in the stock world, that people in finance understand stocks a little bit better. People who are in the markets, in the finance industry, probably should be more aware of what is happening in the stock market as a whole. Perhaps they have better chances because they understand where the market is headed. But first and foremost, you can't time the market. It's impossible to know what happens. You never knew that COVID was coming, or if Tesla was going to skyrocket, or if Bitcoin was going to explode. Not that Bitcoin is in the stock market, although it kind of functions like a stock even though it's a form of currency. Bottom line, I think the number one thing that I get asked when I tell people I work in investment banking, or as I'm about to finish saying investment banking, they just hear investment and they say, oh, what stock should I buy? What do you think about the stock market? If anything, a large part of those that work in investment banking don't work directly or at all with stocks. If not, most of my work is with private companies that don't have public stock available for people to buy. Some of the potential buyers that I work with my clients could be public companies that have stock, but that doesn't necessarily mean that I work with stock directly. If anything, I've never really worked with stocks. I have plenty of other videos that cover what I do, literally, so I'm not going to talk about how investment banking is different from stocks or what we do directly, but I will point out that there are jobs within the finance world like sales and trading and hedge funds that work directly with stocks and perhaps is the more familiar part of finance that the general world is more familiar with through movies like The Wolf of Wall Street or TV shows like Billions, where people are dealing with stocks. As a whole, in common English, I think the two biggest roots of stock trading that you guys might see, sales and trading and hedge funds, they're slightly different in the sense that sales and trading is similar to what we do in a way, in the sense that they're client-facing, they're not handling their own money in general, and they are trading, they're salesying on behalf of clients and client money. They are handling stocks, they are buying and trading stocks, but they're not using their own money, they don't have their own portfolio. They are trading on behalf of institutions and individuals. Hedge funds, on the other hand, as covered in my hedge fund video, they own their own portfolio, they manage their own money, and their goal is to grow their assets, their portfolio as large as possible by making the right trades, by picking the right stocks over short or long periods of time. While news headlines are largely dictating the movement of stocks lately, especially because of how widespread the media is, how widespread the news is, and everyone seems to be dictated by similar trends in the news. If there's negative news about the presidency or about COVID, stocks tend to go down. If there's worldwide beneficial news lines like COVID vaccine confirmed, then stocks go up. But you have to realize for places like hedge funds where there's experts working on stock trading for long periods of time, a lot of this work is technical. They're looking at PE ratios, market caps, industries trends over time, financial performance quarter over quarter, year over year, and making sure that there's room for growth potential within these companies and not just looking at, oh, today feels like a good day to buy this stock. COVID's happening, so we're going to buy healthcare stocks, which is why experienced investors and well-known investors like Warren Buffett say that one, it's impossible to time the market, and two, if you don't do your research, if you don't do your math, if you aren't an expert in stock, you shouldn't mess too hard with it because the house always wins, and individual investors, it's really hard for you to win against those that have giant amounts of capital, large databases, hundreds of people working directly to beat the market. It is interesting though, and I cover this also in my hedge fund video, that not many hedge funds, not many professionals that do this for a living tend to beat what's known as the S&P 500 and a lot of these index funds that cover the general economy as a whole. Simply put, if you pick individual stocks out, it's very unlikely for you to beat the overall return of a bird's eye view of the economy as a whole. This part is a bit controversial, obviously, because there are times where the economy's going down, but people have hedged their bets appropriately, they've beaten the market. There are firms every year that do significantly beat the S&P 500, but this doesn't seem to be a consistent trend year over year over year. And like I said before, it's impossible to time the market and you never know what may happen. At this point in the video, I just wanted to reiterate that I'm not a stocks expert. What I do in my job has almost nothing to do with stocks, except the fact that I do work with a lot of companies, and perhaps in the industries that I'm focusing in, I could see industries trends and where the industry as a whole is headed, but it has nothing to do with public stocks, and not out of annoyance, but just out of, in a way, it's something that I find funny. The moment anyone says they work in investment banking, I think the number one thing that jumps into people's heads is, oh, this person must be good about investments, must be good about investing, therefore, what should I buy in terms of stocks? That is not the case. If anything, I think those that are perhaps in sales and trading, and definitely those in hedge funds, are a lot more aware of what's going on in the market. I will say, I guess the flip side of that is they are working with a lot of undisclosed information that they should not be sharing. because of the nature of their work, so that's probably hard for them to give you advice. In general, to the extent that I understand the market, the extent that I've experienced, I think the safest bet, and not even necessarily a bet, but the safest advice would be to invest in the S&P 500 index or a Dow Jones index, an index fund of sorts, an ETF or a mutual fund that tracks the general market as a whole, rather than pick out individual stocks and hopefully have them blow up and sell at the right time, because it really is impossible to time the market. You never know what something's going to pop. You never know what's going to happen. And 2020 is the epitome example of you never know what's going to happen. Outside of understanding industry trends and finance and the economy as a whole and being interested in economy, finance related economics, macro trends, and news, all these hodgepodge of things that directly and indirectly affect the stock market. Those are all aspects that if you're in investment banking, you probably have to care about, you want to care about, and it affects your job. Outside of all that, I think just being in the finance industry, which happens to be a weirdly small industry, you get a lot of mentorship from those that are older than you, that have been in the field longer, and they have a lot of finance related knowledge that can help you in terms of using the right instruments to invest in the long term, learning about things like the Roth IRA, 401k, and things that they don't really necessarily teach you during school, which I actually think they should. It's one of the most important things in life that schools don't really focus on. Essentially, I know I reiterated this point multiple times throughout this video, but investment banking does not equal stocks. There is parts of investment banking as a whole, if the investment banking world was an umbrella, that focuses on the public market and works directly with the stock market. I would argue a significant portion of those that say that they work in investment banking aren't trading stocks on the daily, don't have insider information on stocks. And there are cooler parts of finance outside of stock trading that you could possibly ask them about. Or maybe not. Thanks everybody for watching as always. Happy New Year, stay safe out there. And as always, see you guys in the next video.